I want to turn to Janet Yellen. You're a member of the committee. You asked her question. You heard her speak. Are you going to support her?
As you may know, I did not support her when she was initially appointed to the Board of Governors, and the concerns I had then are still there. She is very strongly in support of the quantitative easing policies of the current Fed, which have now driven us to a $4 trillion balance sheet for the Fed, and in my opinion, created much greater risk in our economy. And so I still have those concerns. Frankly, I haven't made my final decision about how I will vote, but I still have the same concerns that I had before. And she very clearly said today in her confirmation hearing that she intends to continue to pursue the current Fed policies that I think are extremely dangerous to the U.S. economy.
You might not be a yes vote for Janet Yellen, but do you think at the end of the day she's going to win confirmation on the floor of the U.S. Senate?
Well, it's dangerous to predict around this place, but I think if you force me to make a prediction, I think she probably does have the votes.
And she did well enough today in that hearing to address some of those concerns among some of your Republican colleagues?
I believe that I'll go this far. I don't think she really addressed the concerns. She didn't resolve any of the existing concerns, but I do believe she probably will get enough votes to be able to get through confirmation.
And if you don't support her, what outcome would you want? Who would you want in that seat?
Well, I haven't looked at alternatives. I could certainly come up with some if I had a few moments to look at it, but I'd want somebody who would start immediately taking us off of what's been called the morphine money, the quantitative easing, and immediately start to reduce the phenomenal burden of the federal regulatory scheme that the Fed is now leading that is so negatively impacting our smaller banks.
And let me follow up on that, because you were pressing her on when are you going to start to turn the spigot off, if you will? When is the tapering going to begin? She didn't commit to you specifically on a date certain. Did you expect that she would? And what do you think is the real risk if the Fed does continue these bond buyings at an $85 billion a month pace for the foreseeable future?
Well, if the Fed doesn't taper off, then what we're going to see is a continued risk of inflation. We're going to see a continued...
We're not seeing it right now.
That's because I can't quite give you an explanation for why it's not happening yet, but I don't see how we continue to go through this without seeing that develop. Also, you're going to see the moral hazard that has taken all of the air out of the sails of the effort to deal with our fiscal crisis here in Washington, and you're going to see a continuation, I think, of the consolidation of wealth in the larger sectors of our economy, the large financial institutions, rather than seeing the kind of true wealth development that should come with a normal monetary policy and a normal economy.
Then do you think there's a misunderstanding? Elizabeth Warren, who expressed extreme support of Janet Yellen, while at the same time is very critical of banks. Do you think there's a misunderstanding, and some might not realize that quantitative easing has been great for Wall Street, has been great for banks? It's made the wealthy wealthier. The last day of the government shutdown, when the Dow shot up over 200 points, it did nothing for the everyday man, and it did a whole lot. It made Wall Street and big-time investors a whole lot richer. Do you think everyone in that room understands that?
I don't think everyone in the room understands that, and that's unfortunate, because that's one of the areas of questioning that I and some others got into with Janet Yellen, and she has indicated that she thinks that the quantitative easing has really helped the housing market and has really helped in some other markets. The reality is the statistics show that at most it could probably be attributed to about 0.25% growth somewhere along the line over the process, but in the meantime it is consolidated wealth in the larger financial institutions of the country, and the fund managers have made a lot of money off of it. Small banks have not done well off of it. Main Street has not done well off of it, and like I say, the economy can't really be shown to have been boosted that much by it. But now we have a $4 trillion balance sheet at the Fed, and we have someday to find a way to wean our way off of it. And you'd ask me, Peter, about, she said she wouldn't say when. I did hope that she would at least say that it needed to happen in the near future or next quarter or the next couple of quarters, but she wouldn't commit to that.
Let me just ask you finally, if I could, too big to fail came up as well. She was pushed by Senator Vitter and others. Would you go further to embrace changes that might deal with these large banks? What did you hear from her answer, and were you satisfied with it?
Well, I think her answer was that, if I interpreted her correctly, she wasn't quite endorsing the Brown-Vitter legislation that would go in and set capital standards statutorily.
Raise it even higher.
Yeah, but I do think that she said that there needed to be more attention, and I believe I heard her say that she believed there was some kind of a subsidy in the way the current law operates that, again, benefits the larger banks and the larger financial institutions to the detriment of Main Street. And I think that part might actually be accurate. We do need to focus on that issue a little better.
Senator Crapo, we have to leave it there. Thank you so much for joining us. Senator Crapo from the great state of Idaho, and Peter Cook, our chief Washington correspondent, my co-pilot today in our special coverage live from Washington, D.C.